Let's do it. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and a member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is unchanged. Boy, what a crazy day. What a crazy day. I guess let's start. Let's look at the 5-minute real quick, then I'll go to the daily chart, and then we'll analyze the small time frame in a little bit more detail. So today is supposed to be like the rest day in front of the PPI and CPI numbers. It was insane. I mean, the insanity started even pre-market. Let's hit the pre-market chart up here. You know, big gap down, rolled all the way down to 356.50. That led to a $6 upside bounce pre-market. I guess $5 upside bounce pre-market or so. Then we came down a little bit into the morning meeting. Market opens, we rip all the way down and make new lows in the year. We break the pre-market lows. We come all the way down to 356. From this bottom that we called out perfectly, we rally all the way up to 363. That's $7 of upside into that bounce. Digesting sideways, Bank of England information comes out. We rip all the way down to make new lows. That's another $7 worth of a downside move. And then for giggles, we rip up a couple bucks into the close. I mean, this is just crazy volatility. You know, VIX approaching 35. When the VIX is getting to this 35 area, it has been pretty much a buy all year. Whenever the VIX is getting into the mid-30s, it's been kind of the extreme of the year where if you're coming in and you're buying that, the entire year has basically been sell VIX 20, buy VIX 35. You know, some nuance to that, obviously. But every time we're approaching like those low 20s in the VIX, this market completely falls apart, and every time we start getting into these mid-30s in the VIX, the market catches a big bid. Could this time be different? This time I think is only going to be different if we really see just absolute fear, panic, potential capitulation coming in. And what could cause such a thing? What could cause such a thing? Well, PPI and CPI could come in here. Just reading the little note here, the little chart that Patches posted. One of the most persistently volatile periods in generations. Yeah. So Pat posted a chart here that goes back to 1950, and this would be 1, 2, 3, 4. This would be like the tied for the 5th highest consistently volatile period in history. And we've hit the point here where at least according to this, the volatility is higher than what we were seeing in COVID, and we know that the depth of this bear market is also deeper than what we saw in the actual COVID crash, which is interesting because really this bear market that we're going through right now is a result of COVID. It's a result of the emergency policy decisions that we made as a result of the COVID crisis to kind of get us out of it, which a lot of smart people argue, with the benefit of hindsight, that we kind of overdid at that time. But it's just getting this market's been pretty wild, and the volatility here is insane. Again, this is supposed to be the day that was like more of a rest day. Oh yeah, market doesn't want to do anything in front of PPI and CPI. We're in wait and see mode. But anyway, just to talk about these numbers briefly, I obviously have no idea what those numbers are going to be, and even if I did, I don't know how the market's going to react. You can kind of take educated guesses in certain periods of time, and I remember kicking myself when I was on vacation and the CPI number came out in September for August, because at those elevated prices, at those price points, it seemed very clear to me that the risk was to the downside, and obviously the market just got destroyed and has been getting destroyed ever since. at this point, coming into these numbers, it's going to be really interesting because there's like no one long the market. I don't know who owns this market right now. So in any event where that CPI comes in light, and all of a sudden the Fed has an excuse to pull back on their interest rate hikes because, I mean, there's the Bank of England comments that came out today were so scary. You know, we're literally potentially creating global crises in a global environment right now that absolutely will come back and have repercussions against us. And I know that the Fed officials are coming out and basically saying other countries aren't our problem. We just need to focus on inflation in the United States. The Fed has a dual mandate of, price stability and jobs basically for the United States. Like, England isn't our problem, but they're paying attention to it. They're paying attention to it because there's global repercussions on that. But at the same time, they want to bring inflation down. So the language here is staying tough. So it's just going to be a really interesting event because if that number comes in light, and it seems like no one is long this market. If you're long this market with any type of stop loss, you're stopped out because we're at lows. We see all the data, all the positioning data that comes in. Like, people have cash, people have hedges, people have shorts. In any event where that CPI number comes in light, it could be a huge upside event. But I don't necessarily think that if the CPI number comes in hot, that it's already priced in the market. That I don't think. I want to say that's true, but I don't think it's true. I think that if that CPI number comes in hot, that is actually what sets off this next real wave of actual fear and panic starting to come into the market. The ultimate worst case scenario is that the Fed hikes us into a global recession and it doesn't even do anything to hamper inflation. And all of a sudden, if with interest rates kind of where they are, if the CPI number is bad, that could be setting off just a real wave of fear and panic, and then eventually that might actually be that capitulatory event. Eventually, that could be the situation where we're seeing a VIX go to 40 plus. The volume gets insane. The extension gets like something we haven't seen this entire year. And honestly, historically, those are some of the best buying opportunities that's ever come in the history of the market. Though it'll certainly be scary. So, bottom line is we're going into two really big days here. I don't know what the numbers are going to be. I don't know how the market's going to react to it. No one can know. But I'm expecting that this is the potential for really big moves on either side. I guess the interesting one, I'm talking about the number coming in light or the number coming in hot, would be what if the number comes in line? And I'm not sure how the market's going to react to that. That maybe that's priced in to some degree, or maybe that's still on the bear side of things, to be honest, because it shows that they're not making too much of a dent into the situation. But that's kind of the big picture thought process that I have going into these next couple of trading sessions. Again, the technicals here, this was a really interesting day. Where we were pre-market, which was like 356.50, I liked the idea of coming in and buying that because that would be a day 3 or arguably day 4 gap to the downside to new year lows. You could buy back through year lows. We would have that $10 worth of extension from the ADMA that I like to pay attention to for when bounces potentially come into the market. The short-term tactical sentiment was already in the buy zone at yesterday's close, let alone with the bigger gap down this morning. I really liked that. But by the time the market opened, a lot of that opportunity was taken away. We bounced, and I guess I'll go back to the pre-market real quick again. We bounced pretty ferociously here pre-market to getting back above 360, actually having this market basically tick flat, then rolled over a little bit as we were kind of doing the morning meeting and into the market open. But with where we actually opened, this 358.40, I thought that was a tricky spot because we weren't at that degree of downside extension. And yeah, it's a gap down at that point, but it's not a gap down past yesterday's low. It's not a gap down that I would enthusiastically want to come in and buy as a counter trend trade, just because of the degree of downside extension. But I also have to recognize that, it's still that day 4 here to the downside. I don't like to chase price. Chasing shorts in this area on a day 4 on a gap down, when you've got $7 worth of extension, tends to not be super fruitful either. So what I wanted and what I was trying to get across in the morning meeting was more clarity from this market. What I was specifically saying was if, and one of the ways that I love to think about markets, by the way, is in terms of if-then statements. If the market can get back above 360, which it was above that right before we were doing the morning meeting, if the market can get above 360, then I want to look for longs and relatively strong stocks. That was kind of the game plan that I was trying to get across to you guys. But the market was unable to do that. We opened up and sold off. And, the first few trades that I was looking at, that I communicated, that I was involved in, they basically failed because I didn't listen to my own strategy, my own thought process. I didn't listen to that if-then statement. I jumped the gun off the open on a few stocks that were showing relative strength to the market when the market wasn't giving me the confirmation that I needed. So again, if the market gets above 360, then I can look for relatively strong stocks to continue. Again, we were just above this 360 pre-market. We pulled back a little bit. In another universe, this market's having a gap down here. It gets bought back up. We're clearing above 360. I'm getting confirmation. I see relative strength in AMD, NVIDIA, Google. I'm going long those stocks. But it's not what I did. I didn't follow the game plan. The market here is acting very weak. We're below 360. There's no signal to buy, and I'm still looking at and going after some of these relatively strong stocks. Like I'm looking at how Google, basically was able to bounce back real quick to green even as the market was acting weak, and then gives us inside 5. I'm thinking that Google looks really good there. This AMD off the open immediately snaps back to flat to green. It's kind of contending with this $58. I think that this looks really good there. As a secondary to that, NVIDIA, again, bounce on the first 5-minute bar here. So, I'm looking at some of these stocks, even this Airbnb, which was so disgusting here. What you can't even tell is that there was a quick move from 110 back up to 111. I actually bought one. I got a little bit lucky. I gotta say when what I did was luck and not skill. I bought basically 110 the second the market opens, and I sold 110.99. You can see the high tick here on this candle is 111, and then the thing completely failed. So I'm looking for relative strength in some of these names, and I'm going along them, but I'm totally jumping the gun because I don't have the market confirmation. And one of the things I say all the time is it doesn't matter how relatively strong your stock is, if the market's getting completely destroyed, your stock is going to eventually push you out as well. XLE was another one. I actually didn't get involved in the XLE trade, and this one was probably one of the best ones for off the open, even though this one eventually failed with the market also. Good green candle here inside 5. One of you guys actually called this out inside 5 and up. Kind of good continuation there. But again, go back to the market. What did I say in the morning meeting? If the market's above 360 quickly off the open, then I can look for relatively strong stocks. So here I am trying to buy relatively strong stocks. Look what the market's doing. It's trash. So AMD fails, NVIDIA fails, Airbnb fails, Google fails. They're all failures. And that's pretty much how my day started. Sticking with things a little bit to right the wrong, if you will, we very successfully called out both bottoms today, both lows. Like you couldn't have gotten any more perfect on how we called the bottoms today. And again, I don't call bottoms as a rule. You guys know that. I think that calling tops and bottoms, you can say that for CNBC. Maybe if they want to make me a CNBC pundit one day, I'll start using terms reversal and top and bottom and stuff like that, just so I can sound more theatrical. But as long as I'm working with you guys, I'm not trying to be theatrical. I'm trying to help everybody to be able to make money. So I, as a rule, don't call tops and bottoms. In hindsight, I guess these were both bottoms, but in real time, What I'm looking for is calculated areas where the market can potentially retrace higher, and then have a rule set in place for how those upside retracements can become full-on reversals. That's what it's about. So that I'm not going to come in and predict the reversal, but if the reversal is going to come in, I want to be able to capture it, right? That's what we're looking to do. So, what am I looking for here that's giving me the signal that we can be looking for retracement? Well, look at the candle, right? We have a real big pickup in volume here at 10 a.m., which I guess eventually gets dwarfed by the volume that the market was trading on when the Bank of England information was hitting. But 10 a.m. here, we get a solid high volume candle. It's the highest volume candle of the day so far outside of the opening candle, and we know that the opening candle is always going to be somewhat elevated because it's settling the market on open orders. So really, this is like our highest volume candle of the day. Time of day, it's 10:05 a.m., and the market's extended the downside on a 5-minute chart. It's still a little bit early to be thinking about the 15-minute chart. I find that your 15-minute price and time corrections start to become really important at like 10:15 to 10:30. This is 10:05, but I'm looking at a market here that has volume maximizing in 10:05, has extension on a 5-minute chart, massive extension on the 15-minute chart, and I'm 10 minutes away from that 15-minute chart becoming important. So, and at the same time, there's a lot of other stocks that were out there that were giving like hammers on volume. I know like Shopify is one that I called out here. Like, look at this nice volume that came in. Shopify getting destroyed down from, $26.50 from flat all the way down to $25 here. Tails through $25, comes back up, gives you this little hammer candle, has the volume confirmation. Just a whole bunch of stocks basically doing that at the same time as the market. And that's the reason for the call out. That's the reason for the counter trend call out. And when you're taking those counter trend call outs, I know this retracement higher works great. I know it eventually becomes a reversal. And you should have a game plan that enables you to maximize reward in such a way where you are, capturing the entirety of this move. But even as that is happening, you have to recognize at this time, the most likely thing is still for the trade to fail. It reminds me of 2 days ago, we actually called out the low at the exact same time. But that one eventually did fail, as it should. We called out this counter trend trade. It was like almost the exact same trade. I liked today's better because of the volume increase and the shape of the candle. But I remember at 10 a.m. 2 days ago, looking at the downside extension on the 5-minute chart and saying this downside extension for a 5-minute chart here is insane. This market's going to have to give some sort of price or time correction, and we're coming into the time of day for it. And then we were having some longs in here. And we got a full 15-minute correction. It started at 10:05. Initially, it's a 5-minute correction. 5-minute gives a higher low, higher high. That's basically just a 15-minute correction. 15-minute correction then leads to failure as new lows come in. What you should assume is going to happen here today is exactly what happened 2 trading sessions ago. That's what you should assume. That you're nimble, you can come in, you have a signal, and you can come in, you can take that long, get your risk covered, you book more into the ADMA, maybe you get a full 15-minute correction, you book more into the 15-minute correction, and then you hold, 10 to 25% of your position, a much smaller amount from a game planning perspective, just in case that retracement higher actually becomes a full-on reversal, which is exactly what happened today. But you shouldn't assume that what happened today is going to happen. If anything, what you should assume is that the price action from 2 days ago, where eventually this low broke and the trend continues to the downside, actually fails. And the trade actually fails. And that's why when that retracement comes in, you can eventually look for the opposite side of the trade. You can look for the short as well. And I know, 2 days ago, we called this pivot high on the 15-minute correction as an area to then be able to short and be able to come down. And I did as well today. I said that off of this candle, I think I said, if we're going to be super weak, that could be all we get. I know it's 10:15 here, the 15 minutes probably going to come in play, and we could bounce a little bit more, go sideways a little bit more, but if we're going to be super weak, this could be all we get. If you want, you could even try to go short versus this pivot, and I'll tell you where the signal was that was not the move. The signal that this short off this pivot was not the move came from the Russell. The IWM didn't bat an eye into this little potential upside pivot. If you look at the SPYs or you look at the Qs, and now we're looking at 10:15 a.m. If you look at the SPYs or you look at the Qs, you can see here the SPYs kind of created this pivot, and then this candle's weak. It breaks that candle's low. We're working our way back down. The Qs, this candle's a red candle, upside tail into the ADMA. Next candle's breaking that low. We're working our way back down. Both the SPYs and the Qs, if you're looking at that in a vacuum, you're saying to yourself, all right, this is a pivot high that I could totally short versus. And if you took that trade, I don't hate it by all means, even though it failed. And hopefully whatever name you took, like if you shorted the Qs, it might have given you enough to be able to cover your risk before the trade itself actually failed. But the signal that was not the move here was the IWM. I've been saying this all year. And if you guys haven't figured it out by now, the Russell 2000 is a leader for the stock market in the year 2022. It's been this way really since the end of last year. The Russell has been leading the market. At first, it led the market down. The IWM off the open was incredibly weak. This down move here from the IWM was incredibly weak. We didn't even get a green candle in the IWM until 10:10 on a 5-minute chart. You look at the SPYs, not as weak, right? Third bar of the day here, they're trying to give us a little 5, a green candle. There's a little bit of a rest there. It was a little bit more grindy. I guess the Qs were pretty trash also. But the IWM initially led us lower. And then the real signal here, this 10:15 time that I'm talking about, is you've got those SPYs kind of breaking down a little bit more on the small time frame. You got the Qs breaking down a little bit more on that small time frame. You got the IWM just giving an inside 5 and up here. Just given inside 5 and up, upside continuation, full 15-minute correction is complete. 15-minute correction goes even deeper here at 11 a.m. and then we ignite to new highs. Look at the actual 15-minute chart. See, 15-minute correction continues to the 21 EMA on the 15, and then we ignite to new highs here in the market. And by the time that's happening, you got to say to yourself, okay, wow, this IWM is actually really leading us up. I wonder if this could turn into anything. Maybe the SPY starts getting above 360. It's kind of going after it. I was worried SPY 360 would act as a little bit of resistance. This was another good spot to book a little profit potentially if you had enough size here for the move on the way up. And then all of a sudden it's like, wow, we're above 360. Market's extended for 11:45. I go grab lunch. I come back just as the market's like retesting this 360. And I think some sort of little negative headline hit at that point as well. I think actually that was when one of the Fed members was speaking and everyone wanted him to just put a sock in it. So that helps push this market a little bit deeper. And we needed to pivot in this area. Like this was a do or die pivot for the bulls. Pivot right at the 21 EMA. We shook out this 360 but recaptured it right away. And honestly, at this point, the market looks really good. And then fine, it just dies out a little bit. And honestly, this is the type of price action here. This price action that lasted for literally an hour and a half that you would be looking for and expecting in front of the PPI and CPI numbers that are supposed to come out. Not all this insane volatility that I'm, kind of going over with you guys. And then fine, big rally, market's green a little bit, it's flat. They shook a lot of bulls out by breaking yesterday's low, but no real longs are still coming into this market because whatever, the numbers are coming up and it just looks like we're going to kind of die out. And then just as that happens, the Bank of England starts speaking. And I don't remember the exact quotes. You can look it up. But the guy is up all night fretting about the market. He can't sleep. Pension funds over there got to get their in order ASAP, or they've got 3 days to be able to do it, or the Bank of England's no longer going to come and support the long end anymore. And that language clearly scared the bejesus out of the market, and we just got absolutely crushed off of that. You got chatter that the Bank of that Great Britain basically is about to go into a financial crisis. It's similar to what we saw in the United States in 2008, 2009, and it was just pure fear mode. And guys, this we've had so much volatility in this market that in hindsight here in this afternoon meeting, this almost doesn't even look like that big of a move. This is a massive move. We just got destroyed from almost 362 down to new lows in the day. Just red bar, like over the course of, what is this, 20 minutes, 20 to 30 minutes to new lows on the day. Volume's picking up. Volume maximizes again here at lows. VIX's giving us a little bit of a signal with its upside extension, and then seeing similar things. Obviously it's a little bit different than in the morning because it's a news event, but the volume pickup, the tail, the break of lows, the snapback, the degree of extension off of a 5-minute chart. I called out the long trade again. I think I wrote into the chat, I'm buying, and then I think Rowan was like, what are you buying? I said everything or something, and what is everything? And I listed out like a whole bunch of the stocks that I kind of bought at that time. But I was really trying to also highlight to you guys, this is once again, this is a counter trend trade, and it's in the face of really bad news here. All I'm looking for is good execution on a bounce after a $6 down move. And that's exactly what we got. And I was honestly impressed by the degree of the bounce here into the close. It was really more than I was looking for. I was like, all right, if I'm buying basically, the equivalent in certain stocks of 356 in the SPYs here kind of on the way up, if I can get a move here to, again, just the 80 MA on the 5-minute, it's a $1.50 upside move. This trade kind of makes sense to me. And then, we got up to there on the 80 MA. I remember when this candle came in, I was telling you guys, I would love for this to be an inside 5. This candle here at 1525, at 325, I would love that to be an inside 5. An inside 5 there would have been so perfect, because if you were long with me and it breaks up, you got confirmation that you should hold the position further. If you're long with me and that candle comes in and breaks down, that's your shorting opportunity for continuation. But we didn't get it. We got another wide-ranging, sloppy 5-minute candle, and then I was honestly a little bit surprised to see that this market then resolved itself a little bit further to the upside, kind of into the close. MOCs came out to the sell side. That created a quick downtick, but the market bought that back up as well. And I wouldn't say that we had a good close today, but the close could have been way worse. I'll say it that way. We didn't have a good close today, but the close could have been way worse. This close could have been a disaster. This could have been this type of panic selling, a very quick oversold bounce that I catch a little bit, and then doubling of this move to the downside into the close, getting stopped out of those positions at new lows, and just having the next leg of the market kind of just get ravaged. And then who knows what happens tomorrow, how we gap before the PPI, what happens when the PPI hits, and then taking it from there. So that's kind of a recap on the intraday price action today, because there was just so much going on, and I wanted to review with you guys both the things I feel I did well today and the things I did poorly, because I didn't do everything well. I did a few things very well today, and I did a couple things off the open not as well. And I love to review the mistakes that I make with you guys, as well as the things that I do well, because I learn from my mistakes as I review them with you guys, and hopefully you guys learn from my mistakes as well. And that's pretty much where we're at going into the PPI and the CPI these next couple of days. It's gonna probably still be pretty wild. Kind of a doji here for the daily on the SPYs. Qs are New Year lows today, New Year closing lows, and IWM. That IWM relative strength is still so key. On a closing basis here today, we closed down SPYs down 0.5%, Qs down 1.2%, and then the IWM actually green on the day. That IWM relative strength is still it's still such a key to this market. So I think that's all I've got for you guys, and I am happy to take a look at any questions that you guys have. Scrolling up in the VTF. Rich saying, that was what happened to me today also. This market was so crazy, I didn't follow my plan. Yeah, it's hard sometimes, but game planning is key to the business, and I'm upset with myself for kind of jumping the gun a little bit off the open when I didn't have the confirmation that I was looking for based on the game plan that I created on some of the positions that I put on. But live and learn. Still improving every day as a trader myself. Sharir basically echoing the same thing from Sebastian. Today I was looking to short Roblox since it had a downgrade. Roblox is on our list today too for a short, actually. We're looking at Roblox as a potential short versus 34 off the open, and it actually acted very well early on. I never got in it. I don't know if anybody else did, but it was on our list for today. So it got downgraded. The daily seemed like a breakdown. Absolutely, it was a potential breakaway gap. It was a breakaway gap in Roblox today that was very sloppy off the open. Worked a little bit only because of the market, and then basically totally failed. So you shorted the break of the 945 inside candle. I love that setup. Very sloppy here off the open, right? It's extended because of the gap. We know 34 is important. It's struggling to hold above 34. It gives you this inside candle where it tightens up a little bit. That breaks to the downside. You could not have traded Roblox to the short side better than that. If that's how you executed, you could not have traded Roblox to the short side better than that. While everything was breaking down, Roblox almost held the pre-market low, and it didn't move, so I got stopped out for break-even. Do you see any reason for the strength in Roblox today? I don't, Sebastian. I remember noting that, because I remember there was a couple weird things that were out there today. Another one that I thought was super weird, along with this, and by the way, I think you traded that great, was this Rivian. My mind is blown by the fact that I'm looking at Rivian up 3% today. Rivian yesterday announced that they have to recall every single car that they have ever put into production, which is insane, right? At the same time, off the open today especially, you had Josh, repost it if you can. You had these stocks, these like general growth stocks in general, I should say, getting destroyed. Josh is posting some information here. I'm trying to pull up the article. Rivian suspension recall proof super quick and simple to fix. Okay, so maybe that was it. I guess that was it. So I didn't, that's why your information is so important. Sebastian, I'm not sure if you can see it. Josh just posted an article that you can look up that basically says that the Rivian recall is a very quick fix. So maybe that's what gave it the relative strength. But my mind was blown all morning that I was looking at a green Rivian compared to how the market was trading, and I just stayed away from it. And Roblox also. Roblox downgraded today. It's below support and was just able to hold up extremely well. What else? From Rich, do you have any advice on dealing with stress on managing intraday trades during this kind of volatility? Sure. So this business is very stressful in general. I had kind of crazy P&L swings today, bigger than I wanted or intended, to be honest. And I certainly understand that pressure and that stress. I've always found that the best way to deal with things is to be comfortable with everything that you're doing. The best way to be comfortable with everything that you're doing is to have a full, clear understanding of everything that you do before you get in it. The best way that you can have a full, clear understanding of everything you do before you get in it is to have a game plan written out ahead of time. And that's why I love and I prefer to be involved in trades that I game planned even before the market opened. If I can game plan a trade before the market opens, my P&L's not moving, the market's not moving, I don't have that extra undue stress, and I can really think about if this trade triggers, how much is this trade worth to me, what's the proper entry for it, what type of game plan do I want to put in place. And then if I have that thought process all built out, and I'm comfortable with the amount of risk that I'm putting on in the trade, and I'm comfortable with the reward profile of the trade, then I don't need to stress. I can just let the trade play out. I also do think in general, even though I've had some pretty good counter trend trade callouts recently, I do think in general trading with trend is easier, better, and much less stressful than taking counter trend setups, even like the really good ones that we had and kind of called out today. We like to joke around that with trend trading we call it stress-free trading. We used to joke around about that a lot. Like whenever we'd see somebody on the desk, really fighting some crazy stock counter trend, looking for that pivot, stressed out about the counter trend trade, versus, well, what if you're just long and you're going with the trend and you're chilling, as opposed to, trying to pick that upside. And that was, maybe more during the COVID crisis and things like that, when everything was ripping up, or post-COVID crisis and everything was ripping up. Stress-free trade and just be with the trend. But the biggest thing for me, for sure, is that game planning, like I was talking about. Being comfortable with it and knowing exactly what you're doing before you're in, because then there's nothing to be stressed about. You know exactly what all potential outcomes are. You know exactly how much you stand to lose. You know you can make good money if it works. And then there's nothing to be stressed about. You just let it play out. And if you are stressed, it probably means that you're doing something wrong. Either you're not game planned properly, you have too much risk on, something like that. So stress can almost be a signal to us, especially if that stress becomes very heavy, that potentially you're pushing things too hard, have too much risk on, and you should take a half step back and chill out, chill the beans. From Cameron here, how do you determine when to exit an opening drive trade? I shorted Meta at the open and got a nice move out of it, but I covered too early. So you're talking about more on the reward side of the trade. Can I type? So, generally, if I'm taking a with trend trade, I only want to allow myself to get stopped out of it. Like I don't exit it in my favor ever, unless it's a trail that I get stopped out of, or maybe if I'm dealing with an extreme amount of extension, and I just decide to book it. And usually, if I'm doing that, I have the thought process of re-entry on in this case, a bounce. So, in this type of move, I'm probably not getting out of my entire position. I'm probably not. Honestly, if I shorted Meta off the open for myself, I would have been in the position the entirety of the day. If I had a price off the open, my stop would have been highs. Highs never broke. I never would have liquidated the position. I would have been in it all day. I would have covered my risk. I would have booked some more into the extension. I would have booked more into the further extension, especially because I thought that the market was going to bounce. Might have re-shorted that stock into some of these bounces and, not been as profitable on the re-shorts as I would like. But I would never get out of that position. You're with the trend on every time frame. It's moving in your favor. You got an amazing profit cushion. Have a game plan where you're going to make money in it no matter what. But, most of the time, if you just liquidate the position, it's pretty much what you're saying. You're just going to be getting out too early. So I find that you're better off on these types of trades trailing and potentially giving it all the way back than just going, stock gets to 129.75. You're like, oh my God, I'm making money, I'm out. That's not going to give you the reward maximization that you want to get what I call overwhelming reward for your risk. That the big money really comes from the occasional trade where you get overwhelming reward for your risk. And the only way that that's ever going to happen is if you're willing to give back some open P&L, if you're willing to trail, and you're willing to really hold. So again, for me, if I was short Meta early, I would have been in it to the close, and I probably would be swinging it short. From Zach, every time I trade the open, and it's not like Ravens bad news yesterday. I think that's a football reference. I don't follow football. I seem to stop out for the day very fast. Would you recommend most days waiting until 10 to 10:30 to look for entries? Sure. So this is an interesting question. Avian. So this is an interesting question because of the data that I've seen. So the data that I've seen, and this also just corresponds with like personal experience, is that most of the better traders, more experienced traders is maybe the better way to say it, make most of their money off the open. The open is my favorite time to trade by far. It's my most advantageous time. I do well with that price discovery period. I find that most of the best traders make most of their money trading the open. But newer traders don't do well at the open. I've seen that just statistically over and over and over again. Newer traders tend to make most of their money starting at 10 a.m. Like that 10 to 10:30, 10 to 11 a.m. So it's an interesting thing because I don't want to tell anybody to not trade the open, because if you're going to grow into one of these experienced, successful traders, I think you want to learn to be able to trade it. For me, it's the most profitable time of the day by far. By far. I do probably 85%, 80% of my trading execution is done by 10:30. And post 10:30, I'm not looking to put on a lot of new trades. Something has to be extremely compelling for me to be doing it post 10:30. I need to have a news event that I'm trading, or something's got to be going on, or I'm managing my positions maybe. But I'm not doing much trading generally post 10:30. All my stuff is basically off the open. But again, newer traders, the data shows, don't do well off the open. They do better post 10 a.m. So it's a tricky thing. I want to tell you to focus on what you're best at. And if you struggle off the open and you do well starting at 10 o'clock, then to wait for that. But at the same time, if what I see is that most of the best traders that I know make most of their money off the open, it's a skill set that you want to be able to learn. So perhaps the move is to give yourself, a very tighter limit, not to give up on the open, but to just give yourself tighter limits. Trade smaller, trade with less risk. Give yourself, you can give yourself, we talk about like a limit down for a day's worth of trading. You could give yourself like a trade the open limit down. That is a quarter of your day limit down, something like that. So you're trading very small off the open, but you're involved, you're learning how the price action works. But at the same time, you do best at this point in your career starting at 10 a.m., so you want to save the majority of your risk and the majority of your focus for that time. That's what I would say. That also will require a lot of discipline to be able to do that, because I feel like once we start trading and then, whatever, that first trade works, doesn't work, whatever it is, next thing you know, you're trading a lot more than just that 1/4 of your risk at the open. So you're going to have to be disciplined. But I think that is the thought process that I would consider implementing. What was it about with Airbnb at the open? I don't know. So Airbnb potentially was getting hit, and I realized this too late, just because of how Uber and Lyft was getting hit, and I know that Airbnb is not employing like the independent contractor workers that are the reason why Uber and Lyft got so destroyed, but they're still, Uber and Lyft and Airbnb are all part of that like sharing economy. So it could very well be that, if you were long, Lyft or Uber and you're getting destroyed on it, that you're having to liquidate your Airbnb position, whatever it is. And we also know, and we've discussed this a couple times recently, that Airbnb trades very thin and very fast, especially when stops are going off. So I think that there was some selling that came into Airbnb early, and I think it might have had something to do with Lyft and Uber, even though I think that these are very different companies, that led to this destruction in Airbnb. The rebound in Airbnb was almost equally impressive. This rebound in Airbnb is like, from what they destroyed this thing from 111 down to 103.50 to bounce it back to almost 110. Like, sick, real sick. But I think that's what was going on there this morning. From Hemming on Tesla. Some Tesla because it's close to support around 213.
And then maybe keep it safe for rent or not at all.
Okay, yeah, you got some daily support in Tesla here. It's very wide ranging. It's like 207 to 216 on the daily chart from May, June, July.
So I'll just leave it at that. I want to keep it simple. T3 trading will utilize.
And you plan on swinging it. So I don't support. I don't know where you bought it. But unless you bought it into the close, it's also something I usually don't love. I don't support keeping positions overnight unless you have either a profit cushion or it's a very small position. And looking at Tesla here, I don't see how you could have a profit cushion in it if you're long. This thing was just terrible. It broke lows. It closed near lows. Stock's been very relatively weak. If you bought it at any point in the beginning of the day, you're red in it. And if you bought it when I called it to buy in the market post 3 o'clock, maybe you have a little bit of a profit cushion, but it's not. It's like, unless you bought like 215 on the dot, you probably don't have a good enough of a profit cushion to keep it overnight on any size. You know, what happens if the PPI number, CPI number comes out and just, you know, we gap. Tesla could have news, especially with how Elon Musk is so volatile. Or the market could have news it's going to have, we know it's going to. This thing, you could wake up and this thing could be at 207, like very easily. So if you're going to keep the position overnight, I would say it has to either be on very small size. So if this thing gaps down to 207 tomorrow, you're fine. Or you have a profit cushion. And that's my real preference, is to keep things overnight when you have a profit cushion in them. Because then if the entire market gaps against you, then you're giving back open P&L. So those would be my suggestions. But, you know, sounds like you're already in it. So if you're already in it, I assume you have a game plan built out, and I would just follow it. From Galena here. Last Friday, the strong jobs report came out. Is it possible to predict it is going to be a risk-off day? Sure. So this is very hard. You know, when it comes to earnings reports or it comes to economic numbers, you know, even if you had insider information, which none of us would have or act on, even if you had insider information, you knew what these numbers were going to be, you still don't know how the market's going to actually react to it. Like, you know, like you said, the jobs number was good. People are working. And I remember, you know, joking into the virtual trading floor as the market was getting destroyed. Like, oh my God, the market's getting destroyed because 8,000 people too many have a job. Tell those people to quit their job so this market can go up. On the surface of things, it makes no sense. Obviously, you know, the secondary thinking there is because it is related to inflation. If too many people are working and wages are rising and everybody's bringing in money, then they're spending that money and inflation can't come down. So in that case, bad news is good news and good news is bad news. But there's no real way to know. You know, we take educated guesses, and we want to have a thought process and a thesis on how the market should react based on the environment that we're in as these numbers come out, and then we kind of absorb the information. But at the end of the day, you want to trade the price action. Let the price action tell you what the stock is going to do, and then trade the setups that are coming from that price action. Hope it helps.
Let me ask this, just because I want to be
Got you. Scrolling through here. Next I'm seeing is from Jackie. Is the high daily volume in sock sell today? Wow, did it really trade that much? Wow. It's accurate, right? It's massive. It's really big money there. Is that confirmed by like SMH? Yeah, SMH had big volume today. Nvidia did not. AMD not as much. Yeah, but the semi ETFs had really big volume today. It's notable. I mean, partially as these things become cheaper, just so you know, as stocks go down in price, the volume does tend to go up. But yeah, that's a real big pickup in overall volume, and it's notable. Maybe it means something, maybe it doesn't. But, you know, we want to see volume maximizing at pivots. So it could maybe be a signal that SockSell is looking to pivot or is nearing a pivot. So, you know, we'll continue to watch it. You know, we're watching these semis every day because they're so important for the market. But, yeah, notable. Good eye there, Jackie. Yeah, Micron. That was another one that we're looking at the opening relative strength. This one actually held its low. This is one of the few that you can find here of the opening relatively strong. Maybe the only one of everything we were looking at off the open that had great relative strength. Micron might have been the only one that held its opening low. Micron traded very well today. Very well. All right, gang. Looks like I got through the questions. Hope everyone had a good day today. It was pretty wild, but you know, we had some really good call outs. So that's it. Keep it up. I'll see everybody tomorrow. I got a feeling that this is gonna be a continued hectic week, and
The two tags are reason for
that's it.
filing.
Have a great night, everybody.